Welcome to Alpha Insights. I'm Marcus. Today we're diving into some exciting developments in the energy sector. With winter demand surging and significant deals being struck, there's a lot to unpack. Joining me is Angela, a wealth manager here to break it all down. Angela, glad to have you on the show.
Thanks for having me, Marcus. It's an exciting time in the energy markets.
Absolutely. Let's start with India, where there's been a big spike in electricity demand this winter. What's driving that?
India's peak electricity usage hit about 241 gigawatts in December, which is up about 7.5% from last year. This is near summer peak levels and is largely due to colder weather, a rare winter surge.
That's quite a jump. So, what does this mean for the energy market, and in particular for companies in the sector?
Higher power demand typically increases the need for thermal fuels. Companies involved in coal and gas supply may see a boost in their short-term revenues. However, utilities may also experience some strain on their capacity to deliver, which could lead to higher prices in those markets.
Got it. So, this demand is both a boon and a challenge. Now, let's pivot to the global scene. We saw Saudi Arabia cutting prices recently. How has this affected crude oil orders?
Yes, Saudi Arabia reduced its Arab Light premium by 30 cents per barrel, which has resulted in about 9 million additional barrels being ordered from Asian buyers, particularly excluding China. This is significant because it shows the sensitivity of regional refiners to price changes.
So, more barrels flowing into Asia could tighten availability elsewhere. That's important for traders to note. What are the implications for oil service companies?
Exactly. Higher orders can lead to elevated refining activity, which is favorable for oil services companies. However, it's important to remember that while demand rises, producer margins might get squeezed due to the lower pricing.
Interesting balance there. Now, I want to highlight some corporate movements. Equinor is making headlines with substantial investments. What can you tell us about that?
Equinor has announced supplier agreements worth $10 billion aimed at enhancing both offshore and onshore operations. This substantial commitment signals a positive outlook for capital expenditure in the sector.
Definitely a strong indicator of growth. And what about Iberdrola? They just made some big moves too.
They announced a boost to their dividend framework with a new capital increase plan worth about 1.7 billion euros. This is a clear signal to shareholders that the company is in a position to return value.
Sounds like a win for investors. What else should we be keeping an eye on?
Watch for developments regarding grid stability in India, as any issues could affect power prices and fuel consumption. For oil traders, any follow-ups from Saudi pricing could greatly influence regional flows.
So much to keep track of. If you had to summarize today's discussion, what would your key takeaways be?
First, the spike in India's winter demand is both an opportunity and a risk for utilities and fuel suppliers. Second, Saudi price cuts led to increased crude orders in Asia, which can impact supply chains and refining. Lastly, corporate actions from firms like Equinor and Iberdrola indicate growth and investment in the sector, things investors should definitely watch.
Thanks for sharing those insights, Angela. As always, it's enlightening to have you here. That wraps up today's conversation on Alpha Insights. Stay tuned for more updates in the financial world.